All right, it's official. Wolfspeed has filed for bankruptcy. We're going to talk about exactly what that means, what's next for existing shareholders, whether there's an opportunity in the stock as it continues to trade, and really what I think investors should be thinking about doing going forward. I'm Jason Hall. This is Investing Unscripted. This video is brought to you by our friends at Chip Stock Investor. If you want to get deeper into the businesses and stocks that are driving the market higher, go to our link in the description below. They've already helped thousands of other investors make more money. And let's get to it. So this is the press release that came out on June 30th. Wolfspeed basically saying, hey, look, we're filing for bankruptcy. We've got a prepackaged restructuring process. We've been meeting with the folks that we owe money to pre-negotiate something so that when we file for bankruptcy, we have a plan to try to get this approved as quickly as possible. So that's happened. I want to talk about how painful it's been for investors over the past 5 years. So Wolfspeed and the predecessor company that existed, started out as one of the early innovators for LED lighting under a prior name, developed a lot of things for the semiconductor industry, including optimizing silicon carbide, which is their existing primary focus product. This is a stock right now that's trading for less than $1 a share. Back in 2021, it was almost $140 a share. As recently as January, they were selling stock. You do the math on this, sold just under 28 million shares for $200 million. That's a little over $7 a share that they were still getting as recently as January. Back in March, this is when things really started to change. The company was already in a mess, made the decision to bring in a new CEO, turn things around, started negotiating with notes holders, the investors that own the debt in the company. Recently, another leadership change with the CFO, a new chief operating officer. What does it all mean though? What is the opportunity going forward for Wolfspeed and for Wolfspeed investors? First, we have to talk about Wolfspeed, the business. Wolfspeed's business is analog semiconductors, the silicon carbide semiconductors, and analog semiconductors are hugely important in so much of what's going on with modern technology, the energy transition, the electrification of everything, these industrial equipment. Analog semiconductors are how digital devices engage with the real world. You've got an electric vehicle, you step on the accelerator. Analog semiconductors are how the computer, the brain, takes that command that you've sent and it gets the information so that the computer can decide what to do. And then it needs to send a signal to the electric motors. Analog semiconductors are involved in that, getting signal to a monitor. Any way that devices engage in the real world, radio communications, analog semiconductors are hugely important. Now, what we've seen is more of these machines and devices that are operating in the real world need these analog chips. They're in harsh environments. The chips need to last for decades, and we need something that's able to be more efficient with higher amounts of current. Silicon carbide is a technology that's probably the best at that right now. One of the challenges is it's expensive. It's more expensive than the current technology, legacy technology. So what's Wolfspeed been trying to do? Build larger form factors in the manufacturing. So you make larger wafers, you can bring costs down. Also just increasing scale of manufacturing. Now, the business environment has been terrible for industrial and EVs broadly over the past few years. The industry's been in a down cycle as Wolfspeed has been spending hundreds of millions of dollars, really billions of dollars in capital outlays to build out its manufacturing capacity, continuing to spend heavily on research and development, which brings us to the bankruptcy decision. Okay. So all of that has happened. The technology remains incredibly viable and really important to being part of the step change that we need to drive out costs, improve reliability, and drive better performance in these different environments, higher voltage, higher current applications where silicon carbide is just a better solution. Now, what does the bankruptcy mean? We have to think about the capital stack first of all. What is a capital stack? So a business capitalizes, raises money from basically two parties. There are investors that want to own equity. So you want to be an owner of the business. That's the shareholders. And then you borrow money, secured notes, you can do unsecured notes, you can do convertible notes. All of these different debts stand in a different place in the line based on whether the debt is secured. If you're a secured debt holder, you're basically at the front of the line if a business goes bankrupt to get paid first. If you're an equity investor, you're in the very back of the line. You're an owner in the business. Everybody that is owed money gets money before the owners get anything that's left over. Okay. That's why the stock price has come down so much. That's why it's trading for less than $1 today. If you want to get the real scoop of what's going on, it's really the SEC filing that's going to give us the key information. And as you can see up here, this is a 471 page document. There is a lot here. There is a breakdown of what the company is doing with everybody that stands in that capital stack in line, who is going to get what. Here's the cool thing. Right here at the beginning, we've got the prepackaged debt restructuring. This means that the expectation is that shareholders in the company, assuming that it's approved, common shareholders today that previously owned 100% of Wolfspeed will get 3% or 5%, depending on how everything is structured at the end. That explains why the stock price has come down so much. All right, so it looks like we have a plan moving forward, and the market is trying to value based on owning 3 to 5% of the equity in the company when it emerges from bankruptcy. What they're hoping is to be able to emerge from bankruptcy, recapitalize from bankruptcy in the third calendar quarter of the year by the end of September of 2025. So we've got multiple months of this playing out. And I can promise you that stock is going to be super duper volatile. So what am I doing? I'm not going to do anything. The debt holders are going to get 95 to 97% of the business. That's the way it works when companies file for bankruptcy because they have a ton of debt and then they reemerge. The debt holders are the ones that end up with the equity in the new business, right? So that's what's going to happen. There's a lot of people that are going to be buying shares of the bankrupt company right now on hopes that those shares are going to pop, or they're going to end up being worth a larger percentage of the company, or they're going to be worth more money. I don't intend to do that because there's a lot of uncertainty that's going to happen. I'm going to follow the process really closely. I think a smart thing for most people to do is just continue watching the story play out. When the company recapitalizes and reemerges from bankruptcy and then begins trading again, it's going to be really interesting to me. They mishandled their balance sheet over the past few years. They burned through a ton of cash, billions of dollars building out capacity, and probably the worst environment that they could have been doing that in. And it totally backfired. So I expect a better capitalized business on the other side of this is probably going to come out with a good balance sheet, and they have new management in place. Hopefully they can really leverage the great technology that they have while prioritizing a strong balance sheet, because even with the growth opportunity, this is a really cyclical business. So I'm not just following the stock, I'm paying close attention to the business, and I want to see what a recapitalized business looks like before I decide to buy any more shares. If you like this video, you'll love our sponsor, Chipstock Investor. Go to our link in the description for more great content, including videos, deep dive write-ups, and their exclusive message boards, where you get to interact with Nick and Casey and a lot of really smart fellow subscribers. Go to that link to sign up. Not only will you get access to all of the great content at Chipstock Investor that will help you be a better investor, but you'll help us keep making great content too.